Hello guys. And welcome back to our channel. At the moment, as world economics is going down, many people is looking for a good and safe places to invest. Our goal is to look for a great assets and make a reviews for you. Crypto space is also going down at the moment. But not all market, just a main and most popular cryptos, so many people is looking for alternatives. We think best crypto investment at the moment would be in a crypto which is backed with a real, world assets. And today we will talk about exactly a project which is backed with a real world assets. You can find all links to this project under this video below, and links to all social pages. The main strategy of this crypto project is stress-free for investors who wants to hold a real asset without any stress, because it will be backed with real-life assets. RAH Ventures Finance. RAH Ventures project are aiming to stabilize coin through real-world assets and building community through what is called Operation PHX2. Pre-sale date is March 18th with a launch date of March 20th. What is the main goals? First, primary value accrual strategy, accelerating and pushing DeFi ventures into real-world utilization. Purchasing real-world property with backing value and turning the deeds into NFTs that will be placed into treasury for backing. Staking. Staking is the secondary value accrual strategy of RAH Ventures. Bonding. Bonding is the third value accrual strategy of RAH Ventures. Bonding is an active, short-term strategy. The price discovery mechanism of the secondary bond market renders bond discounts more or less unpredictable. Therefore, bonding is considered to be an active investment strategy that should be monitored constantly in order to minimize risk, as compared to staking. The main objective is RAS revenue as a service, bringing our holders a stable and stress-free investment environment. Let's take a look and review a white paper. RAH Ventures Finance White Paper. Crypto's decentralized capitalizing currency. RAH's ambition is to generate and forge a community-empowered decentralized financial asset ecosystem, bringing exponential stability to RAH. What is RAH Ventures? RAH Ventures is a decentralized reserve currency platform on the Binance Smart Chain. Unlike DAI or USDC, which are pegged to the value of the US dollar, RAH's reserves are crypto assets held by the RAH Protocol Treasury backed with. RAH is a free-floating currency backed by our treasury supply of the stablecoin BUST and growing supply with coins that will be voted on by the DAO. RAH tokens can't be minted or burned by anyone except the protocol. The protocol only does so in response to price. Each RAH is backed by at least one BUST. If RAH ever trades below one BUST, the protocol buys back and burns RAH, pushing the price back up to one BUST. There is no upper limit imposed by the protocol to the potential trading price of RAH. RAH is backed by BUST, not pegged to it. This allows the RAH token to achieve a stable floating value, while never falling below the value of its backed assets. The token price is designed to equal 1 BUST plus premium, with premium reflecting market value. RAH also expands its treasury through bonds that are written into contract, venture profits and the 10% taxation on transactions, buys/sells, 4% into treasury wallet, 5.5% into ventures wallet, 1.5% to dev wallet. Bonds are sold by the protocol for different assets, and in return the buyer receives RAH at a significantly discounted price. This increases the treasury and enables us to produce incredible yields for our users. The Ventures wallet will be price actioned off transaction taxes and automatically sold for BUST and placed into a separate wallet outside of the ecosystem. This allows the dev team to use the Ventures wallet for ventures without affecting price action. How is RAH Ventures different than other reserve currencies? The key operational difference designed by RAH developers is to offer a more advantageous investment strategy for the community and a more dynamic and stable return through not only bonding, minting and staking 3,3 but also increasing treasury value with profits from Ventures 4,4. It will be available on Binance Smart Chain. A typical transaction over Ethereum mainnet can cost up to $200. A typical transaction over BSC, however, costs around 50 cents. This allows our treasury to auto-compound at much more frequent intervals, significantly increasing the potential APY percentage versus mainnet. RAH utilizes a different fee recapture ratio. 10% of treasury will be used for buyback and token burn. Our treasury will be unaffected by price action for ventures, as the venture wallet will be used to fund majority of the ventures. There will be a slower overall gain as we are not looking to increase price action at an alarming rate. A slow organic growth from inception will allow for a stable coin lifetime with real-world utilization. Traditional DAOs use TVL and resulting yields as the basis for the valuation of their treasuries. This is not sustainable long-term. In order to ignite mass adoption, these organizations must be able to scale. How RAH solves the scalability issue is to consistently and systematically grow the treasury through revenue. Another key difference between RAH Ventures and other DAOs that are currently on the market is that RAH doesn't work off a roadmap, but it will function based off valuation of the venture's wallet. At set valuation points for the venture wallet, the community will unlock a new venture for us to partake on. The first will be a $1 million price point. To limit competitors, we will not reveal the options per price point until we've reached the goal. Once the goal is met, a poll will be put out for the options of ventures that we can partake on to increase stability and generate revenue for the DAO. All you have to do is hold. In a crypto space that is both volatile and unpredictable, RAH Ventures aims to bring stress-free investing to all holders and potential investors. The key is to not only capitalize on upcoming and exciting crypto-driven ecosystems but to also utilize real-world assets to stabilize the treasury and future of the coin as well. How it works. Interworking of RAH Ventures Finance. Real-world venture capitalist ventures will be our primary value accrual strategy, accelerating and pushing DeFi ventures into real-world utilization. Purchasing real-world property with backing value and turning the deeds into NFTs that will be placed into treasury for backing. The treasury will create the NFT and then purchase the NFT with the purchase value, placing that value into the treasury. Venture profits will be public, and the proceeds will be divided by the amount of cash flow need to pay venture continuance, with the remaining profits being placed into the treasury in different crypto assets. Creating another resource to continue accrual without affecting price action and a negative input. Staking. Staking is the secondary value accrual strategy of RAH Ventures. Stakers vest their RAH on the RAH Ventures website to earn rebase rewards. The rebase rewards come from the proceeds from venture profits, bond sales, and can vary based on the number of RAH staked in the protocol and the reward rate set by monetary policy. Staking is a passive, long-term strategy. The increase in your stake of RAH translates into a constantly falling cost basis converging on zero. If the market price of RAH drops below your initial purchase price, the increase in your staked RAH balance should eventually outpace the fall in price, given a long enough staking period. When you stake, you lock RAH and receive an equal amount of SRA. Your SRA balance rebases up automatically at the end of every epoch. SRA is transferable and therefore composable with other DeFi protocols. When you unstake, you burn SRA and receive an equal amount of RAH. Unstaking means the user will forfeit the upcoming rebase reward. Note that the forfeited reward is only applicable to the unstaked amount. The remaining staked RAH, if any, will continue to receive rebase rewards. Bonding. Bonding is the third value accrual strategy of RAH Ventures. Bonding enables RAH to acquire its own liquidity and other reserve assets such as BUST by selling RAH to investors at a discount in exchange for these assets. The protocol quotes the bonder with terms such as the bond price, the amount of RAH tokens entitled to the bonder, and the vesting term. The bonder can claim some of the rewards, RAH tokens, as they vest, and at the end of the vesting term, the full amount will be claimable. Bonding is an active, short-term strategy. The price discovery mechanism of the secondary bond market renders bond discounts more or less unpredictable. Therefore, bonding is considered to be an active investment strategy that should be monitored constantly in order to minimize risk, as compared to staking. Bonding allows RAH Ventures to accumulate its own liquidity. We refer to this as protocol controlled value, or PCV. PCV is the amount of LP the treasury owns and controls. The more PCV held in escrow, the more robust the protocol is as an operational platform. A healthy PCV ensures that there is always locked exit liquidity in our trading pools to facilitate market operations and protect token holders. Since RAH becomes its own market/bank essentially, on top of additional stability for RAH investors, the protocol accrues a perpetual revenue stream from LP rewards, bolstering our treasury. As our platform continues to grow, we will continue our exploratory process of migration to on-chain governance as part of our long-term roadmap. But RAH Ventures will launch as a soft fork of Time Wonderland with its own dynamic smart contract that not only allows wealth building through 3,3, but also allows holders to gain rewards in BUST by holding. Each transaction of the coin will incur a 14% tax: buy, sell, not bond, staking or minting. With each transaction tax, the venture wallet will be funded, the treasury grows, and the community gets rewarded. Tokenomics. The design behind the token. Breakdown. 7 million initial supplies of tokens. LP lock will be possible at a later date. Multi-stig wallet for all wallets within the ecosystem. Due to the safe moon bond burn method, we cannot lock LP at this time. For transparency, we have added multi-stig wallets. Transparency is key within RAH Ventures. There will be a face to the project along with a multitude of legal documents attached to the LLC. 0 development team tokens allocated in whitelist presale. Dev team buys in on their own. Initial APY for staking set at 10,000%. APY having every 1 million tokens. After 7 million tokens are issued, growth is based on increasing value of the treasury by RAHs. Distribution of initial supply. 14% will be used for EDO and LP building, 1 million. 20% will be set aside for the community to partake in ventures at an earlier rate. 1.4 million. 20% will be set aside for the community to partake in ventures at an earlier rate. 1.4 million. 20% will be locked and vested for team members, 1 year lock, 1.4 million. 9.5% will be used to market the token throughout the crypto space and other forms of media. 0.5% will be airdropped to contributors to the foundation of RAH Ventures. Token utilization. The token price is designed to equal 1 bust plus premium, with premium reflecting market value. RAH also expands its treasury through bonds that are written into contract, venture profits and the 10% taxation on transactions, buys/sells, 4% into treasury wallet, 5.5% into ventures wallet, 1.5% to dev wallet. Bonds are sold by the protocol for different assets, and in return the buyer receives RAH at a significantly discounted price. This increases the treasury and enables us to produce incredible yields for our users. The Ventures wallet will be price-actioned off transaction taxes and automatically sold for bust and placed into a separate wallet outside of the ecosystem. This allows the dev team to use the Ventures wallet for ventures without affecting price action. Continuing goals. What does the founder/CEO of RAH Ventures Finance hope to bring to reality? End goal is the price appreciation of the token through continued assimilation of revenue streams. For long-term growth, RAH Ventures is not to be a reserve currency. RAH considers itself a harvester of assets. Why? RAH has carefully considered a host of legal issues in connection with the protocol. In developing the RAS methodology, the most important aspect is to consider securities law. Tokenizing the off-chain asset itself brings a whole host of issues into play, most notably regulations related to the nature of the interest being tokenized. Using the RAS model, in the off-chain asset will have no ownership by RAH, only a service agreement to provide a set-aside amount to further the deal, thus not creating a securitized asset. RAH also knows that securities laws vary amongst regulatory jurisdictions and that a security in one country may not be in another. Therefore, as projects are originated, structure of the project will be considered by jurisdiction. At 10 million valuation and first venture launch, RAH will reveal himself and total docs team. This is a dream, a vision, a foundation. Accumulation of real-world assets tied to blockchain technology, slowly closing the gap between the metaverse and the real world. Disclaimer: due to legal ramifications, RAH Ventures will only take on the DAO form in crypto actions not actually being utilized as one. Legally, taxes and KYC would take center stage in forming this community through traditional means, so the team has decided to use RAH as the sole proprietor in partnership with RAH Ventures Finance as the funding source. RAH will take loans from the community through the venture wallet in order to buy and action ventures to pay community. RAH speaking. I cannot wait to meet the potential investors who have vested their faith into our vision. I assure you that this project will hit the ground running to create a stable and safe ecosystem for our ecosystem. After taking in legal considerations and potential ramifications, I will be acting on behalf of RAH Ventures as the sole proprietor in partnership with RAH Ventures. RAH Ventures being the financial backing that we need to acquire ventures. I'm really excited to reveal certain price points, as I think our community will be excited and it will push us to the upward trend we all want. RAH is here for the long term. This is not a short-term investment. Ventures will need to either be acquired, in a timely fashion, some will need to be built and others will need to wait on other legal documents, but I assure you that financial freedom for the masses will be around the corner. We will strive to be the DAO of DAOs, the one-stop shops for guaranteed passive investors. Operation PHX will be an unofficial partnership between our token with the bonding of SafeMoon. Operation PHX2 is an unofficial partnership/bond between the RAH Venture Finance token and the SafeMoon V2 token. This token bond will create a flourishing symbiotic relationship. SafeMoon is looking to burn supply while also pushing price action, but not through manual burns. RAH is looking to build supply that is not diluted through its own minting. The relationship will work simultaneously with SafeMoon's deflationary tokenomics and RAH's treasury/venture building tokenomics. RAH will take the bonded SafeMoon once every 2 weeks, to avoid price manipulation, and then burn it into bust. The 5% taken out of circulation per average user wallet has no price action at all, but imagine a churning wallet that is able to burn a bigger supply without diluting the coin. The coin will be burned by RAH, giving SafeMoon a lower supply but actual backing and giving RAH more bust in treasury through the burning of SafeMoon. Ventures. RAH Ventures looks to set itself apart from other tokens through actual utilization, not just throughout the DeFi and Web3 arena but real-world use as well. The developers and RAH have come together in agreement that the saturation surrounding DAOs and the APY life support method is not viable, nor is it a structured ecosystem. Within RAH we will seek to use the Venture wallet to acquire Web3, DeFi assets after we've acquired stable income assets from real world to include real estate, e-commerce, franchises, web offering sites, vacation homes, night venues, gaming development, upstarts, hotels, casinos, online real world, etc. Any and every venture brought to us by the community will be vetted and looked at as a possible addition to the ecosystem. Discounts will be provided to holders of RAH Ventures as we look to add a transaction system along with our own banking card through crypto transactions, and we also look to provide many incentives for holders outside of crypto rewards. This page will be updated regularly with additions to our ecosystem. We will not work off of a roadmap, we will work off venture wallet valuation. Once the wallet has reached a certain amount, the community will be presented with options within that range's price point, and we will take the steps to then go on that venture. All revenue will be reported via the dApp site along with the wallet transaction of the deposit into the treasury. Ventures are what sets our ecosystem apart. We are not looking to reinvent the wheel but more or less utilize what has worked to our advantage while paving the way for others to see this as a way to capture income for their DAOs and communities. Imagine a coin that is able to stabilize monthly while also continuing a linear growth. The main objective is RAH's revenue as a service, bringing our holders a stable and stress-free investment environment.